right? In the early 2000s, because the market was so hot, you had builders all across the country building lots and lots of homes, really saturating the market with homes to the point where we had got to 4 million homes on the market, and that caused a huge oversupply and caused some fundamental problems in the real estate market. You know, when you're in real estate, you get asked how's the market all the time, and recently in a lot of those discussions, after being asked how's the market, people like to say, like, I feel like it's like there's a crash coming. I feel like it's kind of like 2007. And so I wanted to bring in some information and some data and some facts to really illustrate that 2025 is not like 2007. They're very, very different markets. The market is absolutely slow right now. It is very, very slow in terms of number of units, but there's some fundamental differences in the market today versus 2007 that make it very, very different. And I'm going to give you the three really clear reasons and data points on why it's not the same. Because if you're making a decision in your real estate, either purchasing or selling process based on a feeling, you know me, I don't like feelings, I like data. And so we're going to look at some of that information and take it point by point and show you that the 2005 market, yes, it's slow, but it's nothing like the 2007 market. And the slowness is not caused by some fundamental flaw in the market that's going to cause a huge crash like we saw in that 2007, 8, 9 market. So the first thing is that the biggest difference definitely is that there are stricter lending standards. People, I think, forget that the crash in 2007 was really caused by really loose, shoddy lending standards. And so back then, subprime mortgages were huge, right? Where you didn't really need to verify your income. They called them like ninja loans, right? No job or income. You didn't need any of that stuff in order to qualify for a loan. And nowadays that is not the case at all. And the other thing was adjustable rate mortgages were very, very prevalent at that time, where they got you in with a low rate and then that rate bumped back up and grossly increased your payments in the future. Again, people learned from that. A lot more regulation. We're not seeing that anymore. And definitely tons of buyers were underqualified and over leveraged. I was actually one of those buyers. In my early 20s, I was in college. My wife, who wasn't my wife yet, was a student teacher. She wasn't even a full-blown teacher yet. And we got a mortgage to buy our first home. It worked out for us. We were responsible. We paid our mortgage, but we were the type of person that probably would never qualify to get a mortgage today based on our income situation at that time. And so that was prevalent all across the economy, and many people were given mortgages that shouldn't have them. And some people had multiple mortgages and were over leveraged, and that's why it led to an implosion. So again, lending standards very, very different. If you look at the lending standards today, right, that there is so many tighter restrictions on getting a mortgage. You got to have verifiable income and assets. You got to meet much stricter debt to income ratios. And this is a big one, right? The average credit score now is 740 versus 620 back in 2008. So you have to have a much higher credit score. You got to be a much more responsible person today to get a mortgage than you could back then. And that was one of the reasons that there was so much chaos in the market, was people were being able to get mortgages at very, very low credit rates. And then the adjustable rate mortgages are, I could tell you, we see hundreds and hundreds of transactions. I don't see really any adjustable rate mortgages right now. Everybody is getting fixed rate mortgages who get financing. And that's a very, very big difference. And so at the end of the day, right, today's borrowers are significantly more qualified than they were, and they're financially stable. They're not in situations that could cause a huge flood of foreclosures. We'll address that at the end of this video. So the next one is the inventory remains very, very low. And this is probably one of the things that's kind of overlooked and not really common knowledge, because we kind of only see what's going on in the current market, and we're hearing lots of information about inventory going up right now. But if we look at the national housing market in 2007, there were over 4 million homes on the market. And that doesn't really mean anything to anybody unless you look at it in context. But I'm going to tell you what that looks like and why that's important compared to the market today. This was caused by overbuilding, right? In the early 2000s, because the market was so hot, you had builders all across the country building lots and lots of homes, really saturating the market with homes to the point where we had got to 4 million homes on the market. And that caused a huge oversupply and caused some fundamental problems in the real estate market. And then now, if you look at the market today, there's an undersupply crisis. There's actually the opposite, right? So there's about 1 million homes on the market today. This is crazy, right? If you think about 4 million homes back then versus 1 million homes homes today. That is a huge difference. I mean, 25% the number of homes today versus back then. And in many markets, there's like under 3 months of supply. So people have been very, very cautious. Builders have been a lot more cautious recently. And then material and labor shortages have also contributed to this, right? Is the cost of materials, the cost of labor has gone up significantly in the last 5 years, which has also suppressed building. So we just haven't had that increase in supply and all of that new inventory coming on the market, and we really have an undersupply crisis. And that's what's really holding the market up today. Is even though the market is slow, we still have very, very low inventory compared to historical levels, and that's been keeping prices steady and definitely will contribute to keeping the market stable, unlike what we saw in 2007. And the other thing that we're seeing very, very commonly, and many of you watching this probably can relate to this, if you bought a home in 2021 or 22 and you got that 3% interest rate, a lot of homeowners are rate locked, right? They're not moving out of their home because they don't want to give up their low interest rate. And that is further restricting supply, because those people who may move to upgrade or downgrade or change their situation are just not doing it because they don't want to give up that low interest rate and get into a higher interest rate. So that's further restricting supply across the board. And so at the end of the day, the low inventory supports prices that are where we're currently at, and is really holding off any type of major downturn, even though demand has slowed pretty significantly. And this graph will show you overall housing supply, right? So the black line is overall housing supply, and this is where we're at today at about 1 million. If you look back at the 2007, 2008, we were 3 times more homes on the market. So significantly more inventory than we have today. And it's still, if you even look at pre-COVID, right, we were at 2 million homes on the market kind of in those pre-COVID years, 16, 17, 18, 19. And so we still aren't back to that kind of normal level when the market stabilized. And so that's definitely going to continue to stabilize prices and really put off any type of downturn that I think people would expect because of the way the market feels slow today. If you're looking to relocate here on the Big Island, I want to share with you a resource that we put together. Over 80 agents from my team, expert agents here on the Big Island, put together a relocation guide that will help you evaluate all of the important factors that you want to take into account before you move here to the Big Island. School districts, healthcare, employment, all of the things that you got to think about, we put into one home buyer's guide that will help you figure out what is best when you start this relocation process here to the Big Island. So if you want this guide, just click on the link below, fill out the form. We will send you the guide for free. And if you want to take the next steps and have a conversation with us, we'd be happy to help. And then the final big point, right, is there is no wave of foreclosures coming. We addressed this a little bit in the financing discussion, but back in 2007, the problem was that when prices started to fall, homeowners had no equity in their home because they had bought at the peak and bought with little money down because those programs were available. And then when values dropped, they couldn't sell the property and get out of it and pay the banks back. So folks just walked away from their homes. And that caused that foreclosure crisis that we saw in 2007. And then there was a larger just recession happening in the economy. So unemployment spiked quickly, and that also caused people to have less income, which further compounded the problem of the inability to pay a mortgage and caused people to walk away. And then today in 2025, if you bought a home anytime in the last 5 years, you have a significant amount of equity. And if you bought a home anytime in the last 10 or 20 years, you have a really significant amount of equity. And on average, the American homeowner has $300,000 of equity in their home nationally. And so we're not in a situation where people are underwater with their mortgage and they can't sell it and then get out of it. So a lot of cases, if somebody does become distressed financially, they can still put their home on the market and sell it, and they don't have to walk away from it. Again, preventing foreclosures from being a big issue. And, even if values dip slightly in the near future, people are, again, like I said, going to be able to sell rather than foreclose. And nationally, if you look at labor statistics, unemployment remains very, very low. Delinquency rates are very, very low. I'll show you guys a graph in a second on what that looks like. But overall, we just don't have the type of situation where there's a lot of distressed people that's going to cause some type of crisis in the foreclosure market. And so again, very, very different than 2007. So this is something that really has to be taken into account. We're just not in a position where homeowners are distressed. And if you look at foreclosure filings, right? This is something I've covered in the past, is that if you look here, this is starting in 2005 and then comes all the way up to 2025. So the last 20 years, we saw the lead up to the crisis, right? Where 2008, 2009, we had record high numbers of foreclosure filings. That has fallen off dramatically, and it was very, very low in the post-COVID years because of the moratorium on foreclosures. But since then, very, very steady, right around 100,000, and that's actually lower than historical averages pre the last crisis. So again, there's just not that many homes distressed. There's always going to be a baseline number of foreclosures, and that's kind of where we're at. And we're not in a situation that we were in back in 2006 and 7, where we saw those foreclosures rising because of what the market was doing. But at the end of the day, guys, it's important to always think about, hey, what is actually going on? What's the data saying versus how you feel? I can tell you 2005 could feel similar to 2007, but it absolutely is not based on the data. And so there's really no need to fear some type of huge crisis coming, because fundamentally the economy is stable and the housing market is undersupplied. People are qualified when they buy, and we don't have a lot of distress in the market. If you have any questions about this, you can always reach out, Dylan@buyabigisland.com, or put them in the comments below, or you can always book a meeting with me to talk about your real estate plans or any questions that you have. There is a link in the description below. Just click on that. It goes right to my calendar. You can book a meeting, and we're happy to have a conversation with you. If you have any questions, always reach out. Thank you guys for watching. I'll see you guys next week. Aloha.